Hi guys, Roy Cousins here. We're back right on schedule, just like a Swiss clock, every Tuesday, bringing you my top level market analytics. This is powered by Liteforex broker. Today we're going to focus on the cryptocurrency market, but more specifically on the Litecoin. I perceive the Litecoin as one of the main barometers for the cryptocurrency market in general, and also, of course, as one of the leading coins in the top 10 group. But also, I think it presents a very unique technical situation that I can take it and reflect the implications to the rest of the market. Now, I'm going to dive in and show you exactly what I'm talking about. Let's take a look. So I think the most important thing is to start from the big picture. Right, so you're looking at the weekly chart, which takes you back about 2.5 years in time, which is enough to show you that basically everything started, the market came to life, so to speak, at the beginning of 2017. Right, I mean the market itself had started to run somewhere around 2013-14. However, up until the end of 2016, it was pretty lifeless. Right, you can see how boring it was. At the beginning of 2017, everything changed, right? There was an enormous move on the upside, which obviously followed by a huge correction phase, which, by the way, we're still in it, right? We're still in that downside correction phase. Now, the most important question I keep asking myself is, are we done with the downside move? Are we done with this bearish market? And I gotta tell you, I think we may be starting to bottom out. It's very tough to determine the bottom, in a bearish market. But I think there are a few guidelines we can definitely follow. For example, take a look at the downside trend. Started from 370. I mean, just think about it. The Litecoin had lost about 80%. Dropping from 370 all the way to where we're trading right now, around 50. And this is pretty much the case with all the other coins, right? Losing about 80, someplace we saw 85 and 90% drop in value. So we are definitely in a very low levels, no doubt. But is this the end? Right? That's the question. Now, usually what I like to see, what I like to measure is roughly the angle on the trend. So you can see the angle on the downside trend was very, very steep, right? I mean, aside from a few upside corrections, the downside trend was very steep. But up until a few weeks ago, basically, because roughly at the beginning of August, I would say 3 months ago, the market started trading sideways rather than downwards. So I think we shifted from downside trend into a consolidation phase, which would, by the way, could be the very last stretch, right? Could be, what I'm trying to say here is that the fact that price moved from a steep angle into a curve, right, and curving out here, suggests that the market may be bottoming out, because bottoming out phase is more of a process rather than a V-shaped move. It's more of a curvy move and slowly and gradually starting to pick up and build up the next bullish market. Now, like I said, this is just an indication, right? I mean, the simplest way to try to catch bottom would be the investor way. You buy right now and you hold it for a few years in time, right? That's the simplest way. But we do things a little bit differently, right? We try to catch the inner moves, the smaller moves. We try to leverage the movements the small movements that we have on a very daily basis. So what I like to focus here is on that very last stretch, on that very sideways movement that it started to form here, right? Very tight range, by the way. Now, what I think is interesting is to analyze that very last stretch. So I'm going to take you to the daily chart and we're going to see this from up close. Take a look at the daily chart. Right now, you can see that sideways movement much clearer, much bigger. Now, whenever I spot a trading range starting to form, I automatically apply the C matrix setup that is perfect for these type of situations, right? It basically what it does, it divides the trading range, it divides the sideways movement into 3 parts, and it helps you much better to read the inner movements, which I call legs. Let's take a look at the legs we have on this trading range. We had the first leg started at the beginning of August, followed by the second leg, which took the previous lows, by the way, quickly turned around and generated the third leg, right? Once price reached the upper section, it went from the lower section back to the upper section. That based on the mid-low key level here, 64.52, that was enough for us to determine that it was the third leg. Then we had this recent downside move, which, by the way, we're still in it. This is the fourth leg. But the question is, where is the fourth leg is going to end? Where is the, where's potentially speaking, how far it can go, and when it's going to change direction and shift from a downside leg into an upside leg. And you know what? We do expect an upside leg at some point, right? This was the fourth leg going downside, and at some point it should reverse and give us the fifth leg going back again to the upper section, right? So now timing becomes the most important element right now, right? Timing. And here's what I did. This is what I always do. Whenever I focus on a move, I try to assess the likelihood of where it's going to go, right? How far it's going to go. This is basically what I'm trying to do here. And I always look for the previous opposite move, because this is how I can apply the Fibonacci projection analysis. Now here's what I found on leg number 3, because leg number 3 was the opposite move. So I was looking for the last part of it, right? The previous opposite, but the last segment, which is evidently this one, right? Now this one actually also, interestingly enough, it is also a head on the head and shoulders pattern. Take a look. This was the left shoulder, this was the head, right? Just happened to touch base on the 64.52 and then generated the right shoulder. So this is also quite important, because it's well known that in order to gauge a breakout of a head and shoulders pattern, you measure the head from the very bottom to the very top, and you apply the same Fibonacci projection measurements. So, this actually, it was a perfect match. I had the same move, right, both from the last segment and from the head of the head and shoulders pattern. And what I did, I applied a very particular number, which is the most important projection level, most important projection key level, the 1.618. So what you can do is just measure from the very bottom right here to the very top, 1.618, and you'll find it right here, this green dotted line. You may thought that I've placed that line because it represents the previous low, and you know what? You wouldn't be wrong in the majority of the cases, because that's usually what I do. I look for the previous high or the previous low, but in this case we got a double technical element. The 1.618 just happens to fall exactly where the previous low was. Price tag is 46.95. So I actually predicted about 2 weeks ago that price will reach 46.95 on the way down, and only then will start to reverse and generate the next upside leg. So obviously the situation is becoming increasingly interesting right now, as price is almost reaching that very level, right? 46.95. Here's where I think can happen. Price will engage with that level and begin to flirt a little bit with that level. What I would like to see is turning around, price reversing at that point, after flirting a little bit with that level, I would like to see price changing direction, visibly starting to move upwards for a few days, right? We want to have a visible turnaround, but we definitely don't want to have price closing below 46.95, because if it's going to close below, I'm talking about the daily close and even more importantly a weekly close, if it's going to close below 46.95, it will suggest one thing, that it's going to go even further downwards to basically to touch base against the very bottom key level. And you may want to write this one down, 44.31, right? So everything between 46.95 and 44.31, it should be a massive support. It's kind of a support range rather than a support level, right? But I would like to see some kind of reaction. Where price hits that 46.95, I would like to see some fight, right? I would like to see price battling against that level and effectively beginning to turn around. That would be the moment that I will strike, and I will strike hard. But take a look. I mean, I'm going to aim for, like I said, this is a short-term type of analysis because we have this consolidation phase, and we have the very fact that we can actually use the C matrix here to gauge the movements that we have here. So I think we're going to see an upside move starting at some point in the very near future, right? Taking us all the way back again to the levels of 64.5 and up to 74 basically. So yeah, I'm thinking, you know, it's going to be about 50% potential return on the way up if we start from roughly, let's say 47, 48, 46. All the way to, I would say, 68 or 70 eventually. So it's going to be roughly about 50-60% potential return on the way up, which is, you know, it's very nice. Even though we're dealing with short-term perspective, when it comes to the cryptocurrency market, the numbers are unparalleled, right? This is why I like it so much. All right, I think that's enough for today. I think you get the picture. I'm still bearish on the Litecoin. Right, I'm still bearish because we miss just a little bit to hit that massive support range that I was talking about. But once we get there, I will quickly shift my conviction from bearish to bullish. So yeah, there you go, Litecoin. Interesting stuff. I hope you enjoyed the session, guys. Don't forget to subscribe to the channel. See you there. See you on the other side. I mean, up until next time, of course. Bye-bye.